Good morning, my friends. Welcome to yet another video. Today we are going to look at order blocks. Sorry. Today we are going to look at order blocks and understand how to use them and how to locate them on our charts and probably how to use them to trade, to enter positions. We'll look at a strategy on how to use order blocks to enter a trade. So let us get straight into it. So, what is an order block, you may ask? An order block is a key area in the chart where a significant amount of capital has entered the market, typically by large institutions or big banks, often referred to as smart money. As we all know by now, we as retail traders have no ability to move the market, but we have institutions that trade big sums of capital in the market. And when these big institutions enter with their large capital, the large capital always reflects on the chart. You would always see a big move happening on the chart. You'd always see a big candle, a huge candle forming, signifying that there has been a big order that has been placed at a certain position. In other words, an order block is an optimized area of supply and demand. We are going to understand that even more. So let us go and look into the chart and try to explain something about order blocks so that you will understand even better. For example, in such a chart, you would see such big candles, such massive, huge candles. When you see such huge candles, you should know that there's been an impact, there's been a massive order placement at such a zone, at such a price. This is a huge move. Look at that. When you see such huge candles, know that this is not you. It's not you, the retail trader, that has made this move, because we don't have any influence on the markets. You'll find that this is when big institutions, big banks enter the market, and you would see it significantly by the formation of these huge candles, very huge candles. So systematically, let us look at this thing properly. Because order blocks just don't form. Order blocks just don't form itself anyhowly. We have two types of order blocks. We have a bullish order block and we also have a bearish order block. A bullish order block is where we have had a large buy orders at a specific zone. We form a bullish order block after that. And a bearish order block forms after there's been a large bearish orders or sell orders for that matter. Okay. In this case, when you see such a thing, we have a red candle forming. Then after that, we have massive green candles or whatever color you want. So let us say that we have a bearish candle forming here, and then you see massive bullish candles forming. This last red candle will be our bullish order block. Okay, this red bearish candle in this case will be our bullish order block. The opposite of this is true. Bearish order block is when we have massive sell orders forming. So the last bullish candle before the massive bearish move becomes our order block. So order blocks have characteristics. Order blocks have rules to make them valid. For an order block to be valid, there are things that the order block must meet before we consider it a valid order block. And what are those things? The first thing that you should know, you should consider when you're looking for an order block, the first thing you should consider is seeing whether there has been an inefficiency left after the order block has been formed. Has there been an efficiency? You can call it an imbalance. You can call it a fair value gap. Has there been a gap left between the order block? What do I mean by that? Look at in this case, a bullish order block. There has been an inefficiency left here. So this qualifies one of our rules for us to consider this a valid order block. Look at this scenario. We also have on our bearish order block also, we can see that here there is what? There is an inefficiency, a fair value gap. A fair value gap or an inefficiency or an imbalance is formed when we have space left between the first and the third candle. We had looked at this in our previous videos. It is formed when there is a space left between, there's a gap between the first and the third candle here. So if, for example, we could have seen something like this happening, no gap here. If you'd see this week and this week has come into contact, or this week has come and filled this gap here, we would not consider this an order block. So that is our first rule for us to consider a valid order block, because not all order blocks are valid. You might see a huge move happening, forming a thing that may look like an order block, but when the price comes back to that place, it won't even react because it has not met the criteria for it to be a valid order block. The second rule that an order block should meet for it to be considered valid is that it must lead to a break of structure or a change of character afterwards. What do I mean? If you can remember, we said that price moves in this particular manner. If we're in an uptrend, price breaks structure to the upside. Okay? So, for an order block to be considered valid, it must break structure, at least break structure. After forming the order block, there must be a break of structure or a change of character for that matter. So if we have our order block here, for example, we have an order block forming here. Let me decrease the opacity here. For it to be valid, for us to consider it a valid order block, it must break structure or shift or change character. So let me draw this here. If price doesn't, if you see an order block forming and price doesn't really break structure of taking out the previous high, you'd not consider that a valid order block. So it must at least break structure or change character. What do I mean by changing character? This is what I mean. Price coming back and taking out this low, then going back to the order block before it continues going down. So if an order block is to be formed at this zone here, then it is only valid, you'll only consider this order block valid after we have now a shift in structure here. Okay, we have a change of character at this point. Once you see price breaking and closing below this zone, taking out this low, now you'd consider this order block valid. Now you'd start looking for an opportunity for price to reverse, to come back to this order block before we continue dropping down. For us to consider an order block valid, it must be unmitigated. What do I mean by that? I'll still draw here. For example, we are moving up and price come back to this order block here, assuming we have an order block here. So once price has mitigated this order block and continues to go up, assuming it doesn't even break structure at this point, and price does this, when price has already mitigated this order block, we no longer consider this order block valid. So, what do I mean by that? Assuming price does something like that. Let me draw this to completion so that I can explain even better. If price is moving up like that, and assuming we have our order block at this point, once this order block has been used, we no longer consider it valid again, because an order block is a one-time use. That is the third rule for us to consider an order block valid. It must be unmitigated. Once you see, even if it's a wick coming down to touch that order block, only a wick, we consider that order block has already been used. So we'll not consider it again as an order block. We'll not consider that zone as an order block. So let us jump straight into our charts so that I can summarize everything you've seen here on the charts. So we've said that an order block is formed when there is a huge order that has been placed at a particular zone, at a particular optimal zone, because price only reacts at optimal zones. So when we see that, we'd start looking and considering, has the order block, or that place that the move has happened, has it met our criteria for us to consider it a valid order block? What do I mean by that? Look at that. Look at this massive move. There's this huge candle that formed here, leaving a bearish order block at this point. So we say that an order block is the last candle that forms before a huge move. It can be a bullish candle or a small bearish candle if you are looking for a bearish order block. It can be, for example, maybe this candle will be blue or even moved up, but let us not say that, because price has already happened. You see, price left a small red candle, like a small bearish candle, before forming this huge move down here. So we'd consider these our order block. So let us mark it out and just wait. But again, how would we know that this order block is valid? How would we know that? The only way we would know that this order block is valid is if it meets our criteria for a valid order block. One, there must be a gap. There must be an inefficiency left between the first and the third candle. There must be a fair value gap for us to consider an order block valid. Two, it must lead to a break of structure or a change of character for us to consider that order block valid. Then it must be unmitigated for us to consider it valid. When price comes and mitigate this order block, we'll no longer consider it a valid order block. So let us play some few bars and wait to see if this order block meets our criteria. First, has it broken structure? Do we have any break of structure? Not yet, at least. There. Okay, look at that. Now, this is what we are seeing here. Price has come down. I want to draw this here. We have broken structure to the downside. We have bodies closing below. This is the lowest point. Price breaking below. So one rule has been met, and that rule is breaking of structure. So that one rule has been met here. So if that has happened, so we have in mind that this order block might be valid. The second rule, is there a gap? Look at this. This is the first candle here, the order block we are considering, and this is the other candle here. Look at this huge gap that has been formed from here all the way down here to this third candle. So we consider that, yes, our criteria number 2 has been met. So this order block is valid. Has this order block been mitigated? No, it has not yet, at least not yet, before price comes to mitigating now it here. So once we have at least 2 of our threshold met, Now we'd consider that this order block is valid, and we'd stay patient and patient enough to wait for this order block to be mitigated before we start looking for an opportunity to go long, or no, to continue going short. Sorry, because now we are in a downtrend. This is a bearish order block, and we expect that once an order block has been formed here, price will always come back to this order block, and this is where you start considering an opportunity to go short. Sasa, let us look at another example here. You see such a move, and price is continuing to move down, and we have a huge, massive candle moving down massively. So we start considering options to look for our order block in this case. But first, we have to know that for an order block to be valid, it must at least break structure. It must at least leave a gap between the first and the third candle, which is called an inefficiency, an imbalance, or a fair value gap, whichever way you want to call it. And also, it must be unmitigated. So let us play some few bars and see. First, we can see that we have a few fair value gap here between these and this. Let me draw this. This is the first candle here, and this is the third candle here. We have a gap. So one of our rules or criteria has been met. Then let's continue playing. We have a break of structure. Again, this was our last low, and price has broken structure. This week has broken structure to the downside with a body and closed below. So our second criteria has been met. So we consider this zone here that we have an order block. So which is our order block? Kwa hizi candles zote, which is our order block? In my case, or in our case, this is our order block. We'd mark the whole of this candle, the whole of this week. I want to draw this. Now, this week here will become our order block because it has been formed by this candle before our movement down. Or you can also decide to mark the whole of this candle here. You can also do that to consider it as an order block. So we'd wait for price to come back to this zone. But you'd also consider our last bullish candle here as an order block because it also meets our criteria for a valid order block. So we'd wait for price to come back to this zone before we look for opportunities to go shorts. There you go. Price is now inside our order block. So this is where you start looking for your opportunities to go shorts. Okay. This is where you start looking to sell this market. Start selling this market there with your stop loss just above your order block and your take profit at your next key zone. In our case, I'd consider this as a key zone. There is a way you should enter this market, and we'll look at it because you just can't see. Your risk to reward will be large, as you can see. But if you go down to a lower time frame, I'll explain to you. You'll understand what I mean in just a few. So once price has come back to our order block, and we have confirmed that this order block here has met all our criteria for you to enter this market, because you just can't, now that the price has come to our order block, you just can't get in. What you do, there is this thing that you're going to look into in details as we go forward, how to enter a market using multiple time frames. In this case, we are using 4 hours. This is 4-hour time frame, and our order block in 4-hour time frame has been mitigated. So how would you enter such a market? You go down to a lower time frame. In my case, I'm using 15 minutes as my lower time frame, and watch what price will do here. In our mind, we know that our order block has been mitigated. So we know that we are going, we now want to move down. We now want we are looking for bearish opportunities. And how do we look for a bearish opportunity? How do we do that? Let me explain this to you. For us to consider a price, if we're in an uptrend, if price is going up, for us to know that price now wants to come down, it must take out this low, forming a change of character. Then price must come back to zone somewhere before we take a short position, right? Before we go short here, once price has come to this zone, placing our stop loss above there and our TP down to where we want to take our TP. So in our case, in this case here, on our 15 minutes time frame, we can still see that price is still bullish. So we in our mind, we know that we are looking for a change of character in 15 minutes. Our order block on 4 hour has been mitigated, but now we go down to a 15 minutes time frame to look for a change of character so that we can consider a place we can enter this market so that our risk to reward can be polite kidogo. Sasa, so price has formed another low here because now this is our most recent low. We can choose to mark it out like this so that to radar in case price does something amazing, we'll know. So that was our low, and our low has been taken out. We can now consider that we have a change of character here. So we just don't enter now that we have a change of character. We'd wait for price to come back to a zone. In this case, this will be our zone. This last candle here would be our zone. Price would expect price to at least come back here before we look for short opportunities. So let us continue playing. There you go, not yet. And there you go. And price even did something here. It swept liquidity settling above this high with this long wick. So after this, our next candle will tell us if we are going to enter this market or not. And look at what the next candle did. It is an engulfing. It came all the way and closed below where this closed. So this is where you enter your short position. This is where you'd want to sell this market, placing your stop loss just above that and placing your TP to your next key zone. In our case, the next key zone will be down here. This is a very beautiful risk to reward down there. So if you play this, you'd see what price did. Price came and hit our TP. So going back to 4 hour, you can see that price came back to our order block and it continued moving down. So my friends, we will continue looking further and further into order blocks and all these other things. And with time, we'll get familiar with everything that we need to get familiar with. So I will see you on the next video. Goodbye.